So the first trade was a losing trade, and what I was watching for was a pullback into 4272 to about 4269. If it could hold and bids appear on the level 2, I am interested in taking the market long. The reason why I said this and the reason why I took this trade was as simple as when the market opened up, we came and rallied into our 4270 level. But number one, I did not see any valid confirmation to take the market long at any of these prices in the first 10 minutes of that rally up. Even though it was in my level of interest, I did not have valid confirmation. Number two, let's say I did get valid confirmation at these 4280s, 4281s. Where am I going to base my risk off of? My risk would have to be below these 72s, below the 69s. So if I do that and enter at 4280 and I'm targeting 4294, that means I'm targeting 14-point reward for a 10-point risk. That does not make sense for me at all because you want to focus on trades that you get at least a 2-to-1 or better risk to reward so you can put yourself in the position, like myself today, having a lower win rate but still coming out with profits. So that's the reason why I didn't take the market long on that rally, and I wanted a pullback into 4272, 4269 for it to play long. We come into this range 4272, and this is when I took the market long, and this was my first trade, which was a $375 loss. And it was a losing trade, but I want to make it very clear here that it was a very, very small loss. It was a 3.31 planned risk, and I stopped out at a 0.23 negative risk after that $300 loss. As I mentioned, long 4272 on the dip, targeting a breakout above the high, then the supply. Apple was turning green, and Tesla was also very, very strong. And I like using these leading equities for confirmation or for more context for the setup. And I exited for a 1-point loss. It just simply did not work out on me. Now, the next trade that I took was a $125 winner. It was a break-even trade. I'm going to consider it a loss because the market kept going down. And a $125 winner on 10 contracts is simply one tick. So, I mean, pretty much break-even or a losing trade. And the analysis for this was exactly the same as my first trade. We were holding that level at 4272, 4269. I got back in, speculating that we were going to rally and break out to the upside. And again, this is all done in real time. This is not like hindsight trading. And this trade began to work out in my favor. I got long when the market looked like this. It rallied about 5 points after my entry. And the issue with this trade was news was getting released at 10 a.m. Eastern time, 30 minutes into the market being open. And this also has to do with risk management. If the market and if my entry is close to where the market is trading at prior to news, I do not like holding into news because I view that as a gamble. I could always get out and re-enter. So what I did is I exited this trade for break even, or basically where I got in at, and I'll consider it a loss because the market kept going down even further. And if I held and I didn't follow my risk management system, it would have been a larger loss. But I got out 1 minute prior to the news being released because I view it as a gamble that the market is right where I entered at prior to the news. Yes, it might feel good if the market rallies up and the news play works out, but that's a gamble because what happens if it comes down and I go against my rules? That would hurt even more because then the market kept selling off and I did a smart play by getting out before the news to protect myself with the thought of always re-entering. So now it's about a half hour into the market being open. I'm 0 for 2. I'm down slightly on the day. Not a huge deal, right? And what I think a lot of people do is they take losses. Number one, they're large losses, so they get frustrated. But even if they are not large losses and they're smaller losses, they get so frustrated at themselves. How many of you take a loss and you get so upset over yourself like you did something wrong? Let me tell you, the market's not after you. You're only after yourself. You can only control your emotions and the outcomes that your emotions present. So keep your head up after a loss and focus on another setup. My next trade was a $2,100 profit. It was a 2.6 planned risk to reward. And I got out of this trade early because the market bounced prior and presented a red flag for me to get out. The reason for this trade was very, very simple. The context in the market, and let me know in the comments if anybody else has realized this, that every time the market tries to go up, that rally fails when I'm talking about a short time frame basis. Every single time the market goes up, and this is true in downtrending markets the most, when we go up, those rallies fail, buyers become trapped, and sellers step into the market. With that context alone, it's a sign of weakness. And what I was watching for was the market to reject 4267 and 4271. If it can reject this range, I am interested in playing the market short. We rallied into it 2 or 3 times and rejecting it. Looking at the tape, just so you get a little bit of a different visual. We come into 4267, reject. 4267 right here, reject. 4267, reject. So, trapped buyers and someone passively selling to those buyers, contextually with rallies failing, gave me enough context and enough confirmation to take the market short when we looked like this, simply targeting 4257 and then 4250, 48, which is the demand zone lower. We get the sell-off lower. We come into my target. I get out 75% of the position, 4256, held 25% for a further drop, and then stopped out the remainder at break even on the remainder 25%. That's a good little trick to manage your trades when you're in them to protect yourself and get the most profits out of the market if you are right or if you are wrong. So at this point, 3 trades, 1 loser, 1 break even. Again, you could call that a loss if you want to, and then 1 winner. Let your winners take care of your losers. Small profit, but it's all scalable and manageable. Not making a point because of the profits. I'm simply making a point because of risk management. I see traders take 3 trades. One of them is a $1,000 loss. The second one is a $150 loss. And then the third one is a winner of 75 bucks. Well, if your losses don't take care of your winners, it is going to be very difficult to be profitable and to be successful in the market. If you have a $400 win, great, pat yourself on the back. But if your next trade is a $750 loss, and then the next trade's a $150 win, and you took 2 trades, but those 2 winners did not outweigh the 1 loss, you're setting yourself up for failure. You want to make sure your losses are much, much smaller than your wins to put yourself in the position to win and be incorrect more than correct, yet still you make profits. Okay, now the next thing that I was watching for about an hour and a half in was the S&P 500 put in a double bottom. We're bouncing off the lows, trying to put in a higher low and then rally up. I was watching the market to reject this 4264 to 4271 general area that I highlighted there, that if we can reject, I would be interested in playing it short, targeting low a day. Now, where this 426471 level came from was the tape from the sell-off around 1045, 1046 Eastern time when we rejected that 4270 level. If we could come into it, reject, I'm interested in taking it short. We never did that. The market rallied, and if you were watching the tape, it was very aggressive, very, very strong. As you can tell, strong buying. No reason to play the market short if the buying is strong. You don't want to go against the market. You want to go with it. And if the market's strong, don't play the market short, even though it's at your level of interest. That's a key aspect there too. Now, my last trade for the day was my 4th one, and notice here it was reduced size. I cut my size in half because I traded it differently, and it still was a $4,900 profit, a 2.5 planned risk to reward, and I got even more than my planned by holding runners. So key aspect here, I sized down, yet I still made more money because it was a position trade, and this win is much bigger than my original 3 trades. Now, the reason for this setup, just to break it down, because I know a lot of people want to know why I get in, why I get out, what my thoughts were, was this simple analysis about earlier, about the market, can it reject 4264, 4271, a level of resistance that I was watching? Well, later in the day, guess what happens? The market pulls back into 4271, 4264, and there's a lack of activity under it. What I mean by a lack of activity is there's a lack of volume or a lack of interest under that range. And if there's a lack of interest at a level, that shows the market can possibly reverse because the market's not agreeing with that price. Also, to add more context to this, we trapped shorts from the high. The market was downtrending, and I saw a lot of people saying, oh, this thing's going to sell off. This thing's going to break the low. We're going to keep going lower. with that context in mind, I knew a lot of people were more short biased in the market and wanted to sell off, not realizing we still were above the support level. I said, this is enough confirmation for me to put on risk for it long at 4275, targeting a high at daybreak at 4294, which was also that supply zone from the pre-market plan, and then 4301 supply. This is more of a position trade versus a scalp, so smaller size and letting it play out by giving it breathing room. I was not scalping it like my original first 3 trades. This was a let it breathe type of setup by positioning myself in the market contextually, knowing that it has a high probability of it breaking the high of day. Well, guess what happens? After I enter this trade, the market begins to rally up higher. And then also another thing that I liked about this, and again, lack of activity, is look how strong that volume was to the downside, and it immediately got bought back up. That's showing me there's a responsiveness participant in the market, and the chances of a reversal will be higher than none. We get that push up, we break the high a day, and we continue to rally. And I just want to walk you through this analysis. I kept boosting my stop loss higher. A higher day target is likely. Stop loss is now placed at break even. So as the market moves in my favor for a position trade, I boost my stop loss higher. The clock was ticking, strong volume was coming in, boosting it higher as we move up, targeting a breakout. Got out 90% at 4294. Held 10% for fun, and then I got all out at 4301 supply just by holding runners. I mean, that rally was strong. The dip held VWAP as well. Now that I'm reviewing this, not even noticed that, but that could also be another confirmation factor. Reversal targeting high a day. I knew this level could act like a magnet, and it was just a really good trade and really simply using price action and managing my risk. So if you take anything out of this video, forget the analysis. It's risk management is the number one most important aspect, along with trade management. If your losses, and you review your trades, and your losses are 2x, 3x than your wins, you are doing something wrong. Your wins need to be at least, on a minimum side, 2 times greater than your losing trades. If you learned anything from this video, check out the links in the description below. If you're not a member of InvestiTrade, I definitely recommend also checking out the links in the description below. There will be some major changes coming soon, and if you're not on the train, you may miss out on it. But I'm ending it. Peace.